All right, let's dive into one of the most talked about, most volatile stocks out there right now, Opendoor. This isn't just about a ticker symbol, you know? It's a massive, high-stakes turnaround story that has Wall Street completely split down the middle.
So why are we talking about Opendoor right now? Well, it's pretty simple. The stock has gone completely nuclear. I mean, a surge of over 200% in just 1 month, that gets people talking and asking one big question. What on earth is going on here?
And that really gets to the heart of our entire explainer today. Is this insane run-up a sign that the business has truly turned a corner? That this is the real deal comeback? Or is it just another flash in the pan? A meme stock bubble for a company that's fundamentally broken?
The whole debate really boils down to two completely opposite ways of looking at this company. On one side, you have pretty much the Wall Street consensus. They see Opendoor as a busted house flipper, super exposed to a shaky housing market. But on the other side, you've got this really vocal bull, an investor named Eric Jackson, who says, nope, you're all missing the big picture. He sees a sophisticated tech platform just disguised as a simple flipper.
To really understand how smart people can see this company so differently, we have to rewind a bit and look at the absolutely wild ride it's been on.
I mean, just look at this chart. This wasn't some gradual, gentle climb. It was a vertical launch. A rally this explosive, this fast, is what put Opendoor right back on everyone's radar and kicked off the huge debate we're seeing play out.
And this rally didn't just appear out of thin air. It came after an incredible roller coaster. You know, Opendoor went from being the SPAC boom darling with a huge valuation to just crashing and burning when interest rates went through the roof. Its value is practically wiped out. So the last couple of years have been this painful but totally necessary reset that set the stage for all the drama happening today.
Okay, so let's start with the skeptics. What's the bear case? Why are so many people on Wall Street still so doubtful, even after that monster rally?
Just look at this disconnect. You've got the heavy hitters, Goldman Sachs, UBS, Citigroup. All of them have price targets that basically say the stock is overvalued by around 40%. In their eyes, this recent party just isn't backed up by the fundamentals.
And here it is. This is the bear's key piece of evidence. Even after a 200% rally, the stock is trading at just 0.3 times its past revenue. Now, to put that in perspective, healthy tech companies trade for way higher multiples. This isn't just a low number. It's the kind of valuation the market gives to businesses it thinks are, well, fundamentally broken. The message from the street is clear. Nice rally, but the business is still busted.
But what if the bears are totally wrong? The bull case, which is being argued really passionately by EMJ Capital's Eric Jackson, says that Wall Street is completely missing the point because they're stuck looking in the rearview mirror.
This quote right here, this is the entire bull thesis in a nutshell. Jackson is basically saying, look, if Opendoor has really changed its business model, then it deserves to be valued like other platform companies that went through their own near-death experiences. Think Carvana or Uber. A re-rating from 0.3 up to 4 or 5 times revenue, that implies absolutely massive upside.
So what is this new model? The bulls argue Opendoor is not just a house flipper anymore. The actual home transaction has become a kind of Trojan horse. It's the way they get you, the customer, in the door. The real money, the high-margin profit, comes from all the other stuff they can sell you. Financing, title insurance, referring you to an agent, warranties, you name it.
So here's how it actually works in practice. It all starts with that core home sale, right? But then Opendoor starts layering on its own services that make a lot more profit. They even make money off the houses they don't buy by referring those sellers to partner agents for a fee. The big idea here is to own the entire customer journey and make money from every single step, not just from flipping the house.
So we have these two powerful, completely competing stories, the busted flipper versus the emerging tech platform. So what could finally prove which story is the right one? Well, all eyes are on the company's upcoming Q2 earnings report. It's a huge moment.
So if you had to watch just one thing, what's the one single number that could signal that, hey, maybe the bulls are onto something? Maybe this big strategic reset is actually working. It's this number right here. The company actually told Wall Street to expect between $10 and $20 million in positive adjusted EBITDA.
If they hit that, it would be their first quarter of operational profit in almost 3 years. That would be a huge signal that the new strategy is working and they've finally gotten their house in order.
Now, the bulls are already preparing for the pushback. Just like Eric Jackson says here, the bears will almost certainly call a single good quarter a fluke, a one-off. But he argues this is the exact same playbook we saw with other huge turnarounds. It's not about one perfect quarter, it's about proving the entire trajectory of the business has changed for good.
But let's be honest, even if the bulls are right about this quarter, the path forward is definitely not guaranteed. This turnaround story still faces some very real risks and challenges ahead.
The bull thesis is not a slam dunk, and you've got to acknowledge the risks are significant. The housing market as a whole is still pretty sluggish. Real, by-the-book profitability is probably years away. And yeah, they've reduced how many houses they own, but they're not totally immune to a housing downturn. Plus, there's always the risk they might need to raise more cash, which could dilute existing shareholders. These are all totally legitimate concerns.
But here's the bull camp's answer to all of that. Those risks, they're not a secret. They are exactly why the stock has that dirt-cheap valuation we saw earlier. The bulls argue the real opportunity isn't in debating the risks everyone already knows about. It's in what the market isn't pricing in at all.
Which brings us right back to where we started, doesn't it? This upcoming earnings report feels like it could be a massive turning point. So is the market about to be forced to reevaluate Opendoor as a scalable tech platform that's been hiding in plain sight this whole time? Or will it just confirm what the skeptics have been saying all along, that this is, and always will be, just a house flipper having a brief, glorious moment in the sun? The answer could be right around the corner.